At the recording of this video, Tesla stock is around 217 bucks per share. So 100 shares of that is 21,700 bucks. Easy maths. But the question is, how much would those 100 shares be worth in 2030, since us long-term investors are investing until 2030, right? That's what we're going to look into today in this video. So if you guys are ready, man, get your popcorn, get your notes, all that good stuff, and smash that like button. Because I don't know why that like button isn't smashed. Smash it. And subscribe if you haven't already. Let's go. So I made this chart here, very simple and easy. Ultra bear, base, bull, and ultra bull case, and as well as the realistic, what could happen by 2030. We have two charts of this. We have one with FSD revenue and FSD licensing, and one without it, just to see what can happen. Obviously, robotaxi is not in any of these either, because that's just crazy. I don't even know how I'm gonna calculate that, but we're gonna leave robotaxi out of here, and the bots and insurance, and just look at the main core of Tesla's business, which is like vehicles and energy on one side, and FSD licensing and global revenue and profits on the other. So let's first start off with that. And if you guys are a Patreon, this chart should be very familiar to you guys. Remember, support level and above, you guys can get access to this, and you can play around with the numbers and all that good stuff. So let's get down to it. Ultra bear case, vehicle deliveries, 10 million vehicles. In the bear case, 15 million, base case, 20 million, bull case, 23 million, and ultra bull case of 25 million. Average selling prices per each vehicle. In the ultra bear case, I reduced it from 40 to 35,000 to stay more conservative. Bear case 30,000, 26,000 base case, 23,000 bull case, and 20,000 in the ultra bull case. I mean, if we're gonna sell 20 million vehicles a year, price should be pretty darn low, $20,000 to $25,000 range. But I'm gonna say 20 just to be more conservative. Here are the revenues for it. As you guys can see, in the ultra bull case, the revenue is far less than the base and bull case. Very interesting. But again, all a prediction, not facts or anything. For all cases, I'm going to be giving it a 20% operating margin for the vehicles, although right now it's between 15 to 16%. I'm guessing by 2030, Tesla will have enough materials and enough economy of scale for them to lower cost per each vehicle, cost of goods sold per each vehicle, for them to be at an average of 20% every quarter price, pretty much per every vehicle that they sell. Here are the profits. Again, as you guys can see, ultra bull case, the profits is less than the base and bull case. That's pretty interesting, isn't it? Then we got the energy revenue. I kept it all at one go because it's hard to see what the bear and base case is going to be for every single case here. So instead of calculating every single case, energy is a separate business on its own, so it should really be its own little thing instead of, playing around just like how it is with the vehicles. With the vehicles, we know how many vehicles they can sell based on price points and all that kind of stuff in the future. But energy is its own little thing, and it's going to grow independently from vehicles. So I put a $90 billion revenue a year by 2030. It could be more than that, but we're going to keep it conservative with a 20% operating margin as well, giving it all the same energy profits, as well as in the realistic view as well. Services, though, that's a whole different story because it goes by how many cars are out there, how many need servicing, how many of them need like parts and all that kind of stuff. And obviously, the more vehicles you have on the road, the more services it needs. And so you guys can see here, 39 billion in revenue in the ultra bear case, and almost 60 billion, then 77 billion, then 88 billion, almost, and over 100 billion in the ultra bull case. For all of them, again, 20% operating margin. Could be more here, but keeping it conservative. And you guys have the different service profits as well. Total revenue in the ultra bear case just below $500 billion, and then $600 billion in the bear case. Base case almost $700 billion. Bull case $706 billion. Ultra bull case a bit lower, just below $700 billion.
Pejjy, man, what is this, man? You're such a bear. 25 million vehicles and it's less than the bull case? What is this?
Well, let me tell you guys, as we keep going into the future, and if Tesla's ambition is to sell more than 20 million vehicles, which I think it is, they would have to have vehicles that are extremely affordable. And I'm thinking 20,000 or even less in order for them to reach 25 million vehicles annually. Like, this is not a joke, guys. 25 million vehicles, that's like 2.5 times what Toyota is doing, and their average price right now is 28,000. So really, when I look at it in a logical way, 20,000 or even less makes sense if we're selling over 25 million vehicles of Tesla, and that's going to bring the revenue lower than the bull case. But here's the thing, Tesla's business in the future is not going to be vehicles. Those who are thinking that this is just an EV business are completely wrong. the more vehicles that are on the road, and we will see that with the FSD as the next chart here, this will benefit Tesla because the FSD is a software as a service. The more vehicles out there, the more they can charge per month. Now, obviously, you got licensing, then you got robotaxi. That's a whole network. So really, who cares if the vehicles are less than, for example, the bull case here and the ultra bull case? Who cares? What matters is why there's that many vehicles out there in the first place. FSD, robotaxi, and all that good stuff. And that's where Tesla's going to be valued. More than 50% of Tesla's core business is going to be FSD in the future, along with energy. And obviously we have the vehicle business, probably less than 20-30% of Tesla. That's the main goal. That's why I'm all in into Tesla stock. Not because it's EV. If it's just EV, I'm not in. I mean, I would have been diversified or invested most of my money in index funds and properties rather than just Tesla stock. So the real money here is the FSD and the other stuff that Tesla is doing. That's where the real money is, and that's what I'm investing and betting for, not for the EV. So anyways, that's why the Ultra Bull case, the revenue is less because it's going to be compensated with the FST and all that good stuff. But anyways, let's go to net income from 96 billion in the Ultra Bear case of 120 billion, base case over 137 billion, and bull case over 141 billion, and ultra bull case of 139 billion. Shares outstanding 3.2.5 billion. I do suspect Tesla will start doing buybacks. I mean, it's 20 flipping third. Look how much net income they're doing, 100 billion. And that's just vehicles and energy alone. So really, I do expect them to do some sort of a buyback. That's what I think. Now, the stock prices, for all of them, I put 30 PE. For Ultra Bear case, 30 PE, 884 bucks per share, and a market cap just below 3 trillion. Bear case, 30 PE, over 1100 bucks per share, almost 3.6 trillion in market cap. Base case, 30 PE, almost reaching 1300 bucks per share, and a market cap over 4.1 trillion. Bull case, 30 PE, over 1300 bucks per share, and a market cap over 4.2 trillion. In the ultra bull case, 30 PE, just below 1300 bucks per share, and a market cap over almost reaching 4.2 trillion. Your 100 shares by 2030 in the ultra bear case will be worth 88,000 compared to what it is now. Let's say if the stock price is 200, that's 20,000 for 100 shares. You made a gain of over $68,000. In the bear case, 100 shares would be worth 110,000, 20,000 is what it is now. The difference is over 90,000 in gains. In the base case, over 106,000 in gains. In the bull case, over 110,000 in gains. And an ultra bull case, over 108,000 in gains. So that is a sheesh moment. And I do think a 30 PE is proper if we're just looking at Tesla as a vehicle business and an energy business. Some people will say 25, some people will say 35. I'm just going to smack right in the middle and say 30 PE for the vehicle and the energy business. Now, let's see the realistic part, what I think what could happen by 2030 in my humble opinion. By 2030, I think Tesla could deliver 13.5 million vehicles with an average selling price of around 33,000. This would give us a vehicle revenue of just 450 billion, almost there. With a 20% operating margin, we get over $89 billion. Energy is the same as the other ones. Services, I'm going to give it just over $53 billion, 20%. We get over $10 billion in service profits. Total revenue of $588 billion. Net income almost $118 billion. Shares outstanding is the same. With a 30 PE, we get a stock price of 1,087 bucks per share and a market cap over 3.5. 100 shares in 2030 will be valued at over 108,000 bucks. If we subtract that from today's 100 shares value of 200 bucks, we get a gain of over almost reaching $89,000. That is a sheesh moment, and I do think this would happen. 3.5 trillion just with vehicles and energy alone. Sheesh. Some would say that, 20% is too much. Reduce it down to 10%, fine. If I reduce it down to 10%, we still get over 2 trillion in market cap, which is absolutely insane. Stock price of 776. That would mean you still made almost $50,000 in unrealized gains if you bought 100 shares now compared to then. So still, $2.1 trillion with a 10% vehicle operating margin, which again, I think Tesla's operating margin is going to be much higher than that. 25% I think would make sense. 30% if the compact car comes in and they have everything, then it's GG, man. It's GG. But that's just the vehicle and energy. What's going to happen when we add an FSD to it? I don't know if you guys are ready, man. FSD is what's going to go crazy here. Smash that like button, because it's going to get insane. The chart is exactly the same, but we just added the FSD global revenue and the FSD licensing. That is all. For the FSD global revenue here, I've already made a video how to break that down. It was very complicated, so I'm just going to refer you to that video, guys, to check it out how it was broken down. And same thing with the FSD licensing. This was even more trickier, and I kept it the same throughout. Why? Because if Tesla sells more vehicles and takes more market, that's less FSD licensing for other car makers because you have more of Teslas out there. But if Tesla sells less, there's more other brands out there that Tesla can license. So it's really a complex way of calculating it. So I just kept it an average median for all of them of 60 billion in revenue and an 80% profit because it's licensing, right? It should be 100%, but I kept it 80%. For FSD global profits, I kept that 65%, although this should be 80%, but keeping it conservative. Now the revenue, because everything is just here, you guys can see. For the ultra bear case, it's over $570 billion in revenue and net income of over 164 billion. That is almost 100 billion extra in revenue compared to the ultra bear case without the FSD, and 70 billion extra in profits, which is absolutely insane. Bear case, over 700 billion in revenue, profits almost reach a 1/5 of a trillion. Absolutely insane. The base case, over $800 billion in revenue, and net income is almost reaching 1/4 of a trillion. Bull case, over $838 billion, had net income 235 billion. And 2030 ultra bear case, the revenue is a bit less, but the profits is more because Tesla is benefiting from FSD. 30 PE, stock price of 1515, market cap almost 5 trillion. That's absolutely insane. That would mean the 100 shares in 2030 would be valued over $151,000. That's $131,000 in gain. Bear case, 30 PE, 1824 in the stock price, market cap almost reaching 6 trillion. Sheesh. That would mean 100 shares by 2030 is over $182,000. That's a gain of over $162,000. 30 PE in the base case, almost $2,100 per share, and a market cap almost reaching $6.8 trillion. 100 shares at that time would be almost $210,000. That's a gain of over $188,000. Absolutely a sheesh moment. In the bull case, 30 PE, that's a stock price of $2,200 per share almost, and a market cap over 7 trillion. Imagine Tesla stock being over 7 trillion by 2030. That's absolutely insane. That would mean 100 shares by 2030 would be over $217,000. That's a gain of almost $200,000. In the ultra bull case, 30 PE, stock price of almost $2,200 per share, and a market cap over $7.1 trillion. That would mean 100 shares by 2030 would be almost $220,000. A gain of literally almost $200,000, just 100 shares. If you believe the FSD and licensing, which I do, will happen, which is absolutely insane. Now, what's the realistic here? What's going to happen, right? What's the realistic part here? As you see, realistic here, I put almost $700 billion in total revenue and net income of 192 billion. Now, obviously, the FSD licensing, I think, would be a bit more because there are less vehicles on the road as Tesla. But just keeping it simple here, we're going to keep it how it is. At 30 PE, that would mean a Tesla stock price of 1777 and a market cap just below 6 trillion. And 100 shares of 2030 would be over 177,000. That would mean a gain of almost $158,000. Now that's crazy. Now here's the thing. If Tesla is benefiting this much and they're growing their FSD like this, and there's no robotaxi here. If you add robotaxi, could you just imagine how big this is going to be? Absolutely, and these are going to be peanuts compared to what robotaxi will do. But if Tesla's doing these kind of revenue, I don't think a 30 PE would make sense at that time. I would think maybe a 40 PE would make sense, around 7 trillion. I mean, that sounds like a big number, but if Tesla is really doing FSD, and if you want to add in the robotaxi, 7 trillion, I mean, making $700 billion in 2030 in revenue, and almost 1/3 of that, or 1/4 of that, is profits. I mean, that deserves a high PE. That deserves, because they're growing fast. Apple is growing 6% annually, and they have a 30 PE. So this thing will be growing at least 15 to 20% with these numbers annually, if not revenue, just profits alone because of robotaxi and FSD. 30 PE makes sense then? I don't think so. 40 PE would make more sense. And so 7.7 trillion is absolutely a number that I can't fathom. So I'm going to keep it at 30 PE even 35, 30 PE, just to stay conservative, around 5.7 trillion. Right now, Ron Barron is saying that Tesla could be worth 4 trillion, and that's already with the licensing and stuff like that. I'm not too sure if he has robotaxis included. And Elon is saying that Tesla will be worth more than Aramco and Apple combined, which would be over $4 trillion. So really, we are looking at around that price target of around 4 trillion. If we go back to the one without the FSD and stuff like that, that's around a 30 PE if they can do $700 billion in revenue and around 130, 40 billion in profits, and we give that 30 PE, that's around the 4 trillion mark, around 1,200, 1,300 bucks per share. So that's very interesting. Obviously, this is all a prediction alone, but here it is, guys. 100 shares by 2030 without the FSD here, as you guys see from the ultra bear case all the way to the realistic. Let's just take a look at the realistic here. If the stock price is over almost 1,100 bucks per share, your 100 shares would be worth 108,000 or 109,000 by 2030, and that would be a gain of almost 89,000. And in the FSD part, at the realistic case that I have here, your 100 shares by 2030 would be almost worth 178,000, and that's a gain of almost 158,000. So sheesh, that's absolutely insane. And that's why, guys, I'm all into Tesla stock. I do not want to bet against Tesla if they're doing all these AI stuff. If Tesla was purely an EV company, I would not be going all in. And even if Tesla was purely an EV company, the stock is expensive right now. I would say even 100 bucks per share is expensive. But because they have energy and they have self-driving coming and the AIs and all the other things that are coming, the licensing and the robotaxis and all these networks that Tesla's trying to do, it's worth more. It's absolutely worth more. And it's going to be too late. By the time we realize it, it's going to be too late. And then that's when you're going to have an Apple moment or an Amazon moment or a Google moment or a Microsoft moment and say, oh man, I wish I bought like 100 shares at least of Tesla stock. You know, obviously not financial advice, but just my opinion and my opinion alone. But if you guys think these numbers are crazy, check out this video, the 2030 stock price, including everything, insurance, bot, robotaxi, FSD. It boggles my mind. Check it out. You won't be disappointed. Obviously, not financial advice, just for your entertainment alone. And obviously, a prediction. Guys, support the channel by getting your I Bought the Dip t-shirt. One right now. If you guys bought the dip, you guys need this shirt. In 2030, if this is what the stock price is going to be, then you need this shirt. Subscribe for more, and I shall see you guys in the next video. See ya.